Selling your San Jose home should be exciting, but one question keeps you up at night. After all the fees and taxes and commissions and costs, what do I actually walk away with? Well, today I'm going to show you exactly what it costs to sell your home in San Jose using real net sheets, just like I do with my clients. By the end, you'll have complete clarity. Hi, I'm Teresa Wellman with Homeowner Experience Real Estate, and I've helped hundreds of sellers over the last 20 years sell their San Jose home. Today, we're going to leverage this experience and actual net sheets to cover the selling expenses in three parts. First, your upfront or get ready property costs. Second, your closing costs or things that you pay through escrow. And then third, the after sale costs, such as capital gains taxes, which I know is a big concern. The first is the upfront get ready costs. I'm going to show you over here on my screen a net sheet that I typically use when I meet with sellers. So I'm going to draw this net sheet up for you for your specific address and the estimated price, and we might even run different scenarios, but then we're going to go through all of the planning and process to help you understand exactly at the end of this net sheet what you're going to walk away with at estimated equity in your pocket. So let's break down these upfront costs. I've broken this sheet into two sections. This first under the green heading, upfront costs, and then paid through escrow. We'll quickly go through that and then show you some actual escrow net sheets. So up front, we're going to talk about inspections. The very first thing a seller is going to do in this area is probably spend money on inspections, other than maybe some home prep, but we'll get to that next. So that's termite, general property inspection, a roof inspection. If you have a pool inspection. Maybe you have an HOA and we need to get those HOA documents ordered because those can take at least 10 business days. So we got to get a jump start on those. Those things all need to be paid up front out of your pocket. And you'll see here the total amount for all of those fees. Then secondly, we're going to talk about home prep. Maybe you want to sell your home as is. Maybe you want to take the method of doing some prep to invest in your property to get an even better return on investment. I've got a lot of different services that I have and offer to sellers to guide you through that process. But for now, let's keep it simple. We're going to use the 2% rule for home prep. That is going to cover your main items like paint, flooring, and landscaping, which are your biggest return on investment. So we're just going to budget that right here, 2%, right? You can see I'm running a net sheet based off of a $1.5 million sales price. You might consider staging investment. It's really important in today's home buyers. Number one, they're paying a lot of money for the property. Number two, they want it to feel modern and look very nice inside. And furniture can really have a huge effect. Most buyers in the San Jose area are tech workers, and they are very left-brained, technical thinkers, not so much as strong in the design or creative aspect. So this is where a stager could really help to give your home life and beauty, because those buyers will recognize it when they see it, but they don't necessarily have the experience to imagine what it could look like if it doesn't look like it right now. So staging is a really valuable investment. Again, depending on what service your agent offers, they may cover this, you may cover it. That is something to discuss, of course, with your agent. And then we're going to budget home repairs, have a buffer in there in your budget. I always put in $5,000 because in my experience in 20 years, there's usually some sort of surprise repair, like a cracked drain line under the house you didn't know about that we need to get addressed. And in most cases, that's under $1,000, but we're buffering it. Maybe you need a fumigation tenting and the market's a little bit slower and you as a seller are going to have to pay for that. Whatever the case may be, we're going to budget this because we're using these numbers to plan your future and your next step. So we want to be conservative here. So those are all the upfront costs, and really this surprise may be negotiated in the contract, but let's assume it's a repair you want to get addressed after the inspection, but before the property goes on the market. So we're going to keep it here in that paid before section. Now we'll quickly go through these closing costs here, but I want to bring up some actual net sheets to show you real net sheets in that, because now that we've got the home all ready for market and you're ready to list, we need to create a budget for the sales proceeds and how those are going to be spent and how they're going to be split up in closing costs. So again, this was an estimated net sheet, and we're going to switch over into an actual net sheet. So when you accept an offer on a property, I will update this estimated net sheet for my clients so that you really can see what we planned on and what the actual is looking like based on the offer. But then I want you to be able to then compare it to the actual escrow one to have confidence and see the full transfer of all those different costs. So the first section in paid through escrow is going to be proration of property taxes. You only pay property taxes twice a year, likely. And depending on when you close, you're going to pay property taxes to the day. Now, the escrow company will help figure that out, that calculation. I'm going to help estimate based on the timing of your sale, whether you're going to get a credit or you're going to owe some and credit the buyer for your part of the escrow. And again, depends on, November 1 payment is not due till December, but that covers the whole second half of the year. And the April payment is covering the first half of the year. So depending on when you sell, there might be some blend of that transition, and we can definitely go through that completely. Then next, we're going to talk about realtor commissions. Typically in our market, even though there were some laws that changed that buyers are hiring their agent ahead of time, typically buyers are asking the seller to pay for their buyer's broker compensation as part of the offer. So this is something you would negotiate, but we're planning the typical, which is 2.5% for buyer concessions. And then your listing broker, depends on what service you choose. 2.5% would be a basic normal service. I also offer several different services, a full menu of services, if you will, that includes prep for profit guidance so that you can get the best return on your investment and know exactly what to prep and what to take care of. And I even have a full service turnkey transition approach, which is really popular for people who are retiring out of the area or maybe inherited a property or have very busy jobs and just don't want to be involved in that process of getting the work done and managing the contractors. So there's different service options there. But for this, let's use a 2.5%, and then based on your actual, we would update your net sheet according to what you choose. Then the next section is going to be title and escrow fees. Those are all going to be pretty standard from one title company to another. And then also I've included notary fees and your natural hazard report that is required legally as part of the transaction. And then there's government transaction fees. Here, there are several things to be aware of. The first is Santa Clara County has a transfer tax. No matter where in the county you are, you're going to pay that transfer tax of 0.11% is an estimate there. And then there's a San Jose City conveyance tax. And then there's a Measure E, sometimes called a mansion tax or a luxury tax. And we're going to talk about that here. But before I go into that, let's talk a little more about the San Jose City conveyance tax, because this tax is actually specific to the city of San Jose. There is a same or similar tax in Mountain View and Palo Alto, but other cities like Campbell and Los Gatos, Saratoga, they don't have this tax. So depending on what city you're in, you may or may not have that. And again, that's a customization for your actual net sheet. Now let's go into that Measure E tax. That was something that was voted on a few years ago. It used to tax any property sale over $2 million in the city of San Jose. But just as of July 1st, 2025, that was increased to $2.3 million. So if you're in that range of $2 to $2.3 million, your property value, then you're going to be saving quite a bit of money, like $8,000 or $9,000 right now by selling now in the second half of 2025 rather than the first half of the year. And I'll show you a net sheet on that. Then, of course, your loan payoff amount will be included in there. Escrow will pay off your mortgage for you at close of escrow. And then there could be miscellaneous fees in the contract, like a buyer requesting home warranty, which is quite standard. So we're going to budget that here. Now, you see, I'm also going to calculate for you your total selling expense, including your mortgage, and then the cost of sale without any home prep or mortgage. It's going to run about 6.4%, including all the inspections, the escrow fees, and city transfer tax fees, and all that stuff. Again, depending on what city you live in, that can fluctuate, etc. So let's go ahead and jump into some actual net sheets so you can see what I mean. So this is one that actually closed in June before the transfer tax change. It was listed at 226, believe it or not. So they had to pay that $8,400 of city's transfer tax or conveyance tax of Measure E you see listed here. So if they were able to delay that sale another 30 days, which they weren't, then it would have saved them that money. But that law quickly changed and pretty quietly changed, and not a lot of people really realized it had happened until pretty much July 1. Here's a seller who did a full turnkey transition package where they moved away and handed the house over to me for home prep. So they've paid a little bit more, but they were under that conveyance tax number, so they didn't have to pay that extra piece. And then here's another net sheet, also oriented the same, that shows you the county transfer taxes. So this is in the same order: the prorations, the realtor commissions, title and escrow fees, government fees. Now you'll see there is no city transfer tax because this property was actually in Los Gatos, California. So all we have is the recording fee and the county transfer tax. So those closing costs are more reasonable when you're outside the city of San Jose or Mountain View or Palo Alto. Then there's these additional fees, and you'll see this seller, this was an inherited property. They had an estate liquidator come and remove all the personal property and sell it, and they owed them $2,800. That was actually paid out of escrow. So in some cases, you can pay out of escrow, but this owner actually walked away with $2.2 million. Pretty amazing. So that is our part two of those costs that are going to come out of your escrow or out of the profits, right? But now part three that we talked about is the after sale costs. So you've now closed the sale. The money is in your bank, but you're not done because you've got to do income taxes the next year, right? So say if you close your property at the end of 2025, you're not going to pay this part three income tax section until April 2026 when you do your taxes. So if you close in January 2025, you have over a year to invest your sale profits and try to make some income on that before you pay the tax man for the capital gains taxes. So this is the number one question I get. So let's break it down into two different tax items. First, there's capital gains taxes, which is the tax on your profit. I'll explain that, and there's exemptions and things. We'll talk about that. Then the second is Proposition 19, which is moving your property taxes with you. So we'll get into that in a little bit. So right now we're talking specifically about the capital gains taxes. So first thing we're going to want to know is right here, the primary residence tax exemption. So if you're married and filed married and both people are on title as owners of the property, then you get a $500,000 exemption from the capital gains. If you're single, that's a $250,000 exemption. So we will, of course, update this capital gains estimated sheet according to your situation. Then there is a formula here that's going to help us figure out this amount, right? So it's basically your sale price minus your sales costs, minus the adjusted basis equals your taxable gain. So if you look here, basically it's this number minus the exemption minus, that's the property tax base. In this case, I had it as $500,000. So that means they bought the property at $500,000, right? So they bought the property at $500,000. They get a $500,000 exemption. That's a total of $1 million. They have a cost of sale of $96,000. So the difference here is $328,000 of the taxable gain. Now, depending on the amount this number is, depending also on your income, so that's hard to estimate here and where you really need to talk to a CPA or tax accountant, there's going to be an equation. Here, this is a federal single, and this is the federal married, and then there's always going to be additional states in California. So be aware of that. So this whole entire equation will be calculated for you to get an estimated capital gains amount. So this particular person bought the house for $500,000, sold it for $1.5 million, only invested $75,000 in improvements over the years, what are called capital improvements. And therefore, they had the $328,000 taxable gain, which means they're going to pay about $87,000 in capital gains taxes when their taxes are due. So, it will help you take that profit estimate. So it was $915 profit after taxes. And if you look here, we had the estimated equity coming to you of $973. So that's the difference there of the amount of money that you will have to, some of these costs don't roll into that calculation, right? So you're going to take some of that extra profit and invest it ideally in something conservative, like a account that's going to get you like a CD, for example, that's going to get you a nice return over the time so that you can make a little bit of money on that tax or that income before the government takes it away, right? So that's the best way to do some planning there. But ultimately, you don't want to go buy a house that's over this amount, right? That's why we do this calculation, so that you really have a budget in mind on how the numbers are going to work. And of course, you must advise it with a tax professional, because they're the ones doing the actual numbers and doing all the different calculations based on your particular income. But this gives you a good target or estimate to understand and start planning, right? Let's talk about this adjusted basis here. So adjusted basis is an important number to really understand, because it's talking about your purchase price for the property plus the capital improvements that you made to the property becomes your adjusted basis. So you see that down here, I've got all these important links here from the IRS. There's a document called IRS Selling Your Home, publication 523, that has this chart in it, and it explains what exactly is an improvement that increases your basis. So big things like additions, large remodels, adding built-in appliances, modernizing your kitchen, new flooring, things like that. Those are considered capital improvements that will increase your adjusted basis. So this is the biggest variable right here that you can do to improve the property, and maybe you're doing some improvements for return on investment that can help you with that adjusted basis calculation as well, to save you some on those taxes. So these are all important things to discuss and understand. And as I mentioned, you've got federal taxes plus state taxes that all blend into these equations here. So the key point here is that it's really important to track your home improvement receipts and consult your CPA to figure out exactly what can be counted towards that adjusted basis, because that can have a huge impact on the taxes that you pay. Now, let's go back to the discussion about Prop 19. Now, I didn't bring up the website for that, but if you go to the Santa Clara County Tax Assessor and search Proposition 19, there will be a website that comes up. I'll put the link below this video that explains exactly what this is and how to do this. But basically, this is not a capital gains tax. This is a separate, amazing California benefit that lets homeowners who are 55 years or older sell their home and transfer their low property tax base to their new home anywhere in California. So if you're looking at relocating to Santa Cruz or up to El Dorado County or Fresno area, somewhere where you've got family or it's cheaper to live or it's just a slower pace of life, then you can transfer your property tax base. So how this works is if you bought your house, say, for $500,000, but your current tax base is, say, $560,000, because your taxes actually go up about 2% every year, right? You can figure out what your tax basis is on your property tax bill, and it'll show you it's going to be higher than your purchase price of the property. Now, you can take that property tax basis and transfer it to any purchase. If you're selling a $1.5 million house, you can transfer the property tax base to anything priced $1.5 million or lower. So say you move to El Dorado County and you're buying something for $1 million, which is lower than what you sold at $1.5 million, but still a lot higher than the $560 property tax base that you have. There is a huge benefit. It's a massive annual savings on your property tax bill to be able to transfer that. So there's paperwork that is explained on the Santa Clara County Tax Assessor website on how to do that. Now, there is a new rule with Prop 19 that if you do buy up above your $1.5 million, there is a blended equation. So you're not all of a sudden paying the new tax rate, you're paying a blended equation. So definitely check out the county assessor's website, because they have a calculator to help you with that blended calculation. And I'm going to put the link below for that. And then the last cost that you might not think of after you've closed the sale is going to be your moving costs. So just be sure to budget that. Some people do it really reasonable. Some people hire a professional mover, and it can be $5,000 or $10,000. Again, depends on how far you're moving away, right? So make sure to budget that in there. And there's such a huge variable, so I don't really help you budget that, but don't forget it. I know that was a lot of information, but these are examples, not your exact numbers, of course. So here's what I offer. A free seller consultation on Zoom for 30 minutes where we will discuss your plans, your timing, maybe where you want to go, what your plans are. And then we're going to give you a current estimate of your home's value, and then set up a custom net sheet with your loan balance, your government tax situation, and help you have a target based on your capital gains estimate and your Prop 19 movement, if you're going to stay in California, to talk about what your budget might be for going to buy a new property. So click the link or scan the QR code on the screen to book your 30-minute Zoom intro call right on my calendar. And don't wonder what your home sale profits are going to be. Find out the real numbers and set up a real strategy. Thanks for watching.